In the last financial year, we as a salaried couple saved 77,000 in taxes just by changing where we invested in, not what we invested in. Over 3 years, that number crosses 2.3 lakhs. And the structure behind this, most salaried couples don't even realize they are allowed to use.
Today we will show you our journey by breaking it into 3 parts. How the money goes into HUF, where we invest in, and how the tax saving actually happens. If you are a salaried couple with no ancestral property, the answer is very simple: a loan to yourself. You transfer money from your personal account into HUF. The HUF treats this as a loan, invests it, and the income is taxed in the hands of HUF, not yours. Two separate taxpayers. And this one decision, loan versus gift, is the difference between saving 77,000 rupees or zero.
Why not gift?
A gift is tax free when received, but the income from that gift gets clubbed back to you. So the tax benefit disappears, but a loan avoids this completely. But this only works if a loan agreement is properly documented. You need an agreement with name of the lenders and HUF, maximum amount, repayment terms, and interest rate. No verbal agreement. Now the key concern: interest rate. Can the tax department question it? Courts have been clear. The income tax department cannot apply a notional interest rate. Rate is only decided by the members. However, a zero interest rate loan can create complications. A small nominal interest rate can remove that risk completely.
Not because the law demands a number, but because it removes every grey area. If you are a salaried couple paying unnecessary tax every year and don't even realize it, subscribe now. We fix exactly that in this channel.
Setting up the HUF is a one-time exercise. Running it correctly is annual. You just need to do 4 things: loan disclosure in your personal ITR, a simple HUF balance sheet, all transactions via banking channel, and loan agreement on your file. This sounds like a lot, but in reality it takes less than 1 hour annually.
Now the most important part, what we actually put inside the HUF. HUF is most powerful when you are otherwise taxed as per your tax slab. So we made one clear decision: fixed income in HUF and equity in personal accounts. Now this is how most people should think about it. But one quick note: since both of us are already in the highest tax bracket with surcharge, we also allocate a small portion of equity inside the HUF.
Because even though equity is taxed at fixed rate, moving some portion of it to HUF without surcharge creates an additional tax efficiency for us.
However, the biggest benefit comes from fixed income. Our HUF has about 30 lakh in fixed income split across FDs, liquid funds and bonds, and this includes our emergency fund as well.
30 lakhs at 7.5% is 2.25 lakh annual interest income. If this was invested in our personal name, 30% tax, 67,500. Add surcharge and cess, the amount goes up to 77,200 rupees. Inside the HUF, zero.
Rupees 77,000 saved every year. Rupees 2.3 lakh over 3 years. Same investments, just different structure. If you want more strategies like that actually move the needle on taxes and wealth, make sure you are subscribed.
Beyond this, HUF gives you additional benefits: separate exemption slab, select deductions under old tax regime, capital gains exemption under section 54 and 54F. This is where HUF becomes more than a tax saving tool. It becomes a wealth building structure.
One key difference: HUF does not get section 87A rebate, so the tax outcome differs for new tax regime from individuals. So the structure is simple: Your own savings fund the HUF, compliance keeps it clean, fixed income drives the benefit, and the tax savings compound over time.
But as your corpus grows, especially with children, a new question comes up. Is your HUF enough or do you need something more?
Now that's where private family trust comes in. Another structure especially built for long-term wealth and estate planning.
In many cases, the two work together. In video 3, we'll talk more about it.
If you are a salaried or professional couple trying to build wealth intelligently, then this channel is exactly for you. Like, share and subscribe, and we'll see you in the next video. Bye.